Welcome to Capital Market Live on Channels Television. I'm Ladi Williams. Time to summarize all that happened in the markets this week, starting with global capital markets. See, European stock markets closed cautiously higher on Friday, rounding off a weekly rally powered by a series of solid earnings and a perceived dovish tilt from central banks. The stock 600 ended 0.2% higher, led by retail stocks, which are up 1.7%. And oil and gas saw the biggest drop, down by about 2.2%. So we'll see the FTSE 100 closed down 0.39%, while the CAC 40 was down 0.19% to end the week. And Asia-Pacific markets rose at the end of the week, with investors assessing a fresh round of data for more clues on the health of business activity through the region. China's service sector expanded at a slightly faster pace in October, with the Caixin Services Purchasing Managers Index at 50.4 points, just above September's reading of 50.2. See the Nikkei there, up 1.10%. The Shanghai Composite was up 0.71%, 3,030 points, while the HSI Hang Seng Index was up 2.52% at 17,664 points. To the U.S. now, see stock rose Friday after soft jobs report drove bond yields lower, and the major averages registered their best week in 2023. The Dow Jones Industrial Average gained about 222 points, about 0.66% to 34,061 points, while the tech-heavy Nasdaq was traded at 13,478 points for the all-share index, up 0.94%, almost 1%. While the S&P 500, 4,358 points, was up 1.38% to close on Friday. And negative sentiment was seen in the unlisted equities market. The NASD OTC index and the market value dipped by 0.78% to end the week, while the total volume traded in the week was 8.5 million units, leading to a 94% drop in the NASD trade volume. There was also a 75% drop in the total value traded during this week, as the NASD investors traded about a total of 120.39 million naira. New Rest ASL Nigeria PLC led the top gainers for the week, while Friesland Campina Wamco Nigeria PLC led the losers counter for the week, as also featured on the top trades by volume due to sell pressure. And still in the domestic market, the month of November is kicking off bullish for the local equities market, as the NGX closed the week in positive territory. The all-share index increased by 4.56% as it closed at 70,196 points, as investors bought Airtel Africa banking and insurance stocks in a trading week ended Friday, November the 3rd. The market recorded total turnover of 2.4 billion shares worth 40 billion naira in 37,959 deals. To sectoral performance, see the NGX banking index rose by 2.67%. NGX insurance jumped the biggest there, 7.96%, while the NGX industrial was up 0.73%. Consumer goods up 0.47%, while the oil and gas counter remained unchanged in the week under review. Mutual Benefits Assurance PLC led 63 gainers for the week, while RT Briscoe PLC led 29 decliners for the week, trading in the top three equities, namely Japol Gold and Ventures PLC, United Bank for Africa PLC, and Fidelity Bank PLC, measured by volume, accounted for 835 million shares worth 8 billion in 5,514 deals. All right, joining us now for analysis is Professor Uche Waleke, Professor of Capital Markets, Nasarawa State University, KEFI, and President, Association of Capital Market Academics of Nigeria. Great to have you on the show. Good evening.
Thanks so much, Ladi. A very good evening to you. My pleasure.
Thank you. So this week, it's been all about the supplementary budget. I want to get your take on how the speedy passage will impact the capital market here in Nigeria.
Yes, Ladi has been described as the fastest we've had, over the years. Well, to the extent that it will boost economic activities, to that extent, it is going to rub off positively on the market. Of course, you know that once there's liquidity in the system, If you have increase in aggregate demand, companies are likely to do well. Lower inventory levels, good bottom lines. And at the end, of course, it reflects in their valuation. Ultimately, the value of a company is a function of earnings. So I think to that extent, it will rub up positively on the market. If you look at the allocations, really, they are mainly on the capital side. If you look at the allocation, for example, to the works, Ministry of Works, about 300 billion, for capital. Agriculture, 100 billion capital, about 90-something billion, recurrent. Housing, 100 billion. If you also take into cognizance the service-wide votes, where you have the wage award for 4 months, taking up to 210 billion, and the cash transfer, 400 billion. So when you look at all of that, going out, spending on the part of government, particularly the capital component, I see that, reflecting positively, on the economy, because the one for works, for example, has projects all across the zone. So I expect that, particularly industrial stocks, the Boa Cement, likes of Boa Cement, Dangote Cement, will benefit from any investment in housing, any investment in, any spending in works. Of course, for the agri, I also expect the few agri stocks that are listed to, benefit. So overall, I think it's positive. Again, looking at also what they are doing, what they have voted for defense, for security, which is also critical.
Definitely need security at this time. But let's drill down on the market now. We see we're back to new milestones in the market. 70,000 point level for the all-share index. What does this tell us about the market at this time?
It's simply saying that animal spirits are returning. The market is bullish. Investor sentiment is, high. That's the interpretation, because the level it got to is quite unprecedented. We've not witnessed that since 1984, when the index was even established. So I think it's quite remarkable, particularly when, again, you look at what is happening across climes in other jurisdictions. If you take the Morgan Stanley Capital Index for emerging markets, for example, of course, it tracks market performance in 24 emerging economies. You find that that of the Nigerian stock market is doing remarkably well at 36.9, close to 37% year-to-date return. If you compare that with the average for the Morgan Stanley Capital Index of just 1.8% year-to-date as of yesterday. Of course, that of Morgan Stanley World for developed economies is, much higher, but it's still below what we are recording here in Nigeria. As I said earlier on, year-to-date return is close to 37%, and the significant bit of it, what's important about it is that it's higher than inflation rate. Inflation rate at 26.72. Return on the market, average return of 36.9, of course, is positive rate of return. And that's why you find investors taking interest in the stock market, because it is one market today where you can talk about positive rate of return, as opposed to other markets where you have other asset classes that are still posting negative rate of return. And we've seen remarkable performance from the financial sector, particularly the banking sector. The banking sector has outperformed the markets, as it were. The banking index today is at over 70% year-to-date return. Insurance sector, over 60% year-to-date return. Of course, we know the highest has come from the oil and gas, for obvious reasons. You know what the oil price is doing internationally. Oil and gas sector has posted over 100% year-to-date return. So these are quite encouraging, but of course, what is worrisome about the development is that what would appear to be the real sector, the industrial sector, is still lagging, lagging behind the market average. Talking about the industrial sector index, which is just at 15%. And it's also a reflection of what is happening in the economy. If you look at the GDP reports released by the National Bureau of Statistics, that talks about the last GDP number that we had. If you disaggregate that, is a non-oil sector that is powering the economy, majorly the financial services sector and the ICT sector. All right, so it's also a reflection of what you find, happening in the economy. So overall, I would say our market is, doing well. But what is also important, I always add that, is to also find a way of connecting the fortunes, the growth we are witnessing in the financial services sector, including of course, the capital market, the exchanges, the growth there, to be able to link that to the real sector growth. Real sector growth today in Nigeria is still weak. Agri sector managing 1.5%. Industry sector is still in the negative territory at minus 1.94. So we have to find a way of ensuring that the services sector, which is the bulk of the economy, 58% of GDP, which is also the only sector recording real positive growth rates in Nigeria today, is linked to the real sector of the economy. And one way to do that is to ensure that people have businesses have access to credit, to ensure that we have a low interest rate environment.
Right, and I did see some data showing that credit to the real sector did improve, slightly in the second quarter. But looking at the level now of the all-share index, is this just a reaction to a new presidency? Does this mean investors are happy with the recent reforms, or are investors just using the equities market as a hedge against inflation and currency devaluation?
A number of factors actually driving the performance. One can see. For me, the major one has to do with if you like, the earnings season. Okay, the fact that many companies have posted an impressive performance with respect to their 9 months performance. For some that have also released 6 months performance. So for the period ended 30th September, if you check a lot the corporate disclosure, financial performance of many of these companies, they are unaudited financial statements. You will find that many of them have witnessed impressive performance, and that's also reflected in their stock prices. Particularly, again, the banking stocks. Talk about UBA, talk about Zenith, if you like, the Fogas stocks. Okay, they have done quite well. All right, and the other factor too, in my view, also has to do with the fact that the pronouncements and the current moves by the government, to calm the forex market is also, a positive development. Particularly now that the central bank is making every effort to clear backlog of arrears. We've heard that the central bank has succeeded in clearing a $6.7 billion backlog of forex arrears in keeping to its promise. So that's a confidence booster, and I expect that even going forward, in the coming weeks and months, that should also spur animal spirits, in the market. And of course, the market is also doesn't like uncertainty. So once you have a level of certainty, it also helps the market. So in terms of political stability that we've also had, relatively speaking, that's also something that's favorable for the market. So I want to believe that the 9 months performance of many companies that have been, whose results have been out, together with the reforms, yes, the reforms, particularly the reforms in the forex market, contributed largely.
All right, Prof. Well, after the break, we'll drill down on some of those earnings and see how and what they tell us about the economy and the resilience of these companies. Right after the break, I'm still speaking with Professor Uche Waleke, a professor of capital market at Nassau State University. Please stay with us. Welcome back to watching Capital Market Live on Channels Telephone. Time to drill down on some of the earnings we've seen this week. And I still have with me Professor Uche Waleke, a professor of capital market, Nassau State University. Thank you for staying on, sir. Thanks so much, Ladi. All right, so to some of the earnings now we got this week. We see Airtel Africa, Honeywell, Boa Foods, UBA all released their Q3 earnings report. How are you seeing the numbers from, Airtel Africa? I know that drove the bullish sentiment we saw in the market this week. And we also have distortions in the FX market, hitting some of those earnings. How are you seeing it generally?
Yes, you're very correct. Airtel, on the face of it, performed very well. If you look at what it reported in terms of the data revenue, in terms of mobile money revenue, those witnessed increases. And if you also look at the KPIs of Airtel, the data customer base, the mobile money customer base, they all also did very well. The voice revenue just witnessed marginal decline. So overall, you would say that Airtel did well. And one way to also see that is to look at the earnings per share before the forex losses reported by Airtel at 7 cents. Compared to the negative number that was recorded after the forex loss was considered. So Airtel was clearly affected by the forex losses, and it was also there in their notes where it talked about the $471 million forex losses coming as a result of derivative and the devaluation of the naira that happened in June following the exchange rates unification. All right, it wasn't just Airtel that suffered forex losses. Unity Bank, if you also check Unity Bank recorded forex loss of 38 billion naira. Okay, and that also affected its performance. So for many of these companies, the forex losses, were an issue. And I was giving a talk earlier today at an event organized by the Institute of Capital Market Registrar. And I was talking about the need for companies to build adaptive advantage. And adaptive advantage refers to regularly, scanning the environment, making sure that at all times you have contingent plans. Why am I saying this? With respect to the forex losses, okay, some of these companies, in my view, could have averted the huge forex losses they eventually reported, even though we know some of them are arising as a result of the fact that they are reporting they are consolidating their financial statements and reporting in the local currency. Reporting in the currency that will lead to, if you like, a translation loss. Not necessarily transaction loss, because there are two different types. So the point I am making here is that it's always important for them to scan the environment before June, even before the handover. All right, during the campaigns, it was obvious, going by what the three leading candidates were saying, that there was going to be fuel subsidy removal because all of them were, talked about, against the corruption, inherent in the fuel subsidy regime. It was also obvious that we are going to have likely unification of exchange rates because, again, the candidates were also against the round tripping that was, going on at the time. So I had expected companies to, anticipate that and also factor that in their decision making. So my advice to companies going forward is that if you have Forex exposure, okay, it will make sense to hold some, dollar-denominated assets, all right? And if you also engaging in contracts, long-term contracts, it's important that you introduce Forex clauses in your long-term contracts. And of course, as much as possible, use financial instruments to hedge your currency exposure, whether it is currency option or whether it is currency forward. And in doing that too, you should make sure you have very good people that can do forecasts, because if your forecasts are wrong, you end up shooting yourself on the foot when eventually you enter into some of these derivative contracts. So in a nutshell, many of these companies were hit by Forex losses, although some of them, for some too, it was an advantage. A good example is UBA. Okay, if you look at UBA's results, non-interest income, UBA grew by over 300%. Non-interest income, UBA. So UBA benefited from Forex gains. This ditto for some other companies, some other banks like Zenith. But on the other hand, Unity Bank was largely affected. And that's why today you find UBA's basic earnings per share at nearly 14 naira per share. And this is a stock that is selling at 20 naira. Okay, for Zenith Bank, for example, Zenith Bank's earnings per share is about 12 naira or 13 naira. And then you have the price at 34 naira. So that tells you that PE ratios of these companies are, okay for a short-term investor with a short horizon. For example, UBA would be a good buy because price earnings is also more like your payback period. It's now lower in the price earnings ratio. The performance is helping to lower the price earnings ratio. Yes.
Right. I guess we're still expecting, some earning reports from other companies. But now let's look at Q4. What are you expecting, for earnings for most of these companies? Do you see the Forex situation getting better?
Oh, yes. The signs are there already. I expect that in the next quarter, we are likely to see a lot of stability in the Forex market. The government has talked about, taking some money from Afrexim Bank, through the NNPC, $3 billion. And there's also the $7 billion coming from, securitizing LNNG, future streams of dividends. So I think all of that, will be used to calm the markets, which is very important to at least, boost confidence. So the more stability we have in the Forex market, okay, likely the chance that issues with respect to Forex losses, will of course be minimized, and people will have more confidence, dealing in our market. And it will also open up for more foreign, investors to play. At the moment, domestic investors are still dominating the market. Yes, a high exchange rate plays in the favor of foreign investor, but when it is when a foreign investor is not sure of the rates, it will be used to take out his money, okay? Or of course that foreign investor will not come. So you still find the foreign investor sitting on the fence. So stability in the Forex market is needed, not only to attract foreign portfolio investments, but also to boost confidence in the in domestic investors, particularly institutional investors, and even the retail investors. And of course, it goes without saying that when you have stability in Forex market, it also fits into the inflation number. Investors again will not want to be investing in the market when real rate of return is negative. So the good news is that for now, the real rate of return in the stock market is positive, and I'm optimistic that the brighter days are ahead.
Yeah, we're definitely looking out for brighter days ahead. And we did see the Naira respond to the news this week. Did gain across some multiple markets there. I want to thank you for coming on the show, Professor Uche Walege, Professor of Capital Market, Nasarawa State University, and President, Association of Capital Market Academics of Nigeria. Thank you so much for coming.
Thanks, Ladi, for having me.
All right, now let's take a look at some news this week. See, the Group Managing Director and CEO of United Bank for Africa PLC has purchased an additional 22.8 million shares of United Bank for Africa PLC, according to information disclosed by the group. According to corporate filing on the NGX website and obtained by us, the shares were sold in transactions that took place on November 1st, 2023. Shares were obtained at an aggregate price of 21 naira 41 kobo per share unit, as the shares purchase was valued at 488.5 million naira. Before the November 1st transaction, Lauba owned just 1.5 million units of UBA shares, but now there's about 24.4 million shares in the group. And in an unexpected twist of financial fate, the Naira staged a dramatic rally against the US dollar, sending ripples across multiple markets. This surge represents a significant setback for currency speculators who bet against the Nigerian currency. For the first time since August 2023, the exchange rate dipped below the 900 naira to a dollar mark on the peer-to-peer P2P platforms, including Binance, indicating a robust turnaround for the Naira. In the meantime, the black market, often regarded as an unofficial gauge of the currency's vigor, listed exchange rates ranging from 1,000 to 1,100 naira to the dollar in cash transaction. On the official front, the Nigerian Autonomous Foreign Exchange Market witnessed the Naira closing at an encouraging 776 naira 14 kobo, marking its strongest finish since October 13th of the current year. And that's the show today. You can watch us again on our YouTube channel. Just visit YouTube/Channels Television. And you can also get more updates on our website, www.channelstv.com, for more updates. From me and the team right here at Channels TV HQ in Lagos, it's bye for now.